Barron's recently did an article where they were asking fund managers what they think is their number one stock pick for the next 10 years. And one name that was brought up, which I absolutely agree with, is Microsoft. And so while you guys smash that like button, I'm going to run the intro. What's up, guys, and welcome back to the channel. Let's get right into this article, and the way that I'm going to do it is I'm going to talk about that opportunity that they see in Microsoft, and then I'm actually going to walk through some of the options opportunities that exist in the covered call space and the cash secured put space, just to give you an idea of what the options community is sort of seeing and pricing in right now. They basically said that there's 5 stocks advisors say to buy for the next 10 years. Now, once again, guys, this is never advice on this channel, but I like to highlight these types of articles. And one advisor that they talked to was Richard Saperstein, and his 10-year pick is Microsoft, and I don't disagree with this name. And of course, just keeping this into perspective, the stock is down almost 31% year to date in this environment where shares are declining just overall. It's kind of crazy that my portfolio is only down, I think, like 2 or 3% right now, considering that all of these names have gone down so much, but that's like a little bit of a humble brag. Now you can see that his 10-year pick is Microsoft, and effectively what he's saying is that there's multiple drivers for revenue, which I absolutely agree with, and they all have secular growth characteristics, and that to me is the most important part. It's not just that there's multiple drivers of revenue. A lot of companies have multiple drivers of revenue, but how many of those drivers have secular growth characteristics? And so, you got Windows, the cloud business, gaming, and LinkedIn. And so Microsoft has very low levels of economic and regulatory and geopolitical risk. I mean, that's going to get tested with the Activision acquisition. I just don't think it's going to happen. That's, again, another position that I have taken in my portfolio. And they got a AAA credit rating by agencies. And I actually, in that Activision video, I walked you through their balance sheet. They can effectively buy Activision just with the free cash flow that they're generating. And so, yes, I agree that they should have a AAA credit rating. And just taking a look at their segment information, just to sort of give you an idea of what they do, guys. So you can see their productivity and business processes. This is where they have Office Consumer, LinkedIn, and sort of like their Microsoft Dynamics business. They have the cloud segment, which of course is where Azure sits, and they have the personal computing segment. This is where Microsoft, the gaming segment sits, and search and news advertising. So you might not know what that is. That's Bing. I know a lot of us use Google. We forget that Bing is a thing. And notice, guys, that revenue has been growing at a double-digit clip for the past 6 years. The cloud business is really starting to pick up steam. Notice that it's growing at a faster and faster rate each year. I mean, it might slow down in 2023 and 2024 as sort of like the market sort of realigns with higher interest rates, but I do believe that there's a secular growth story behind cloud in the long-term future. Now, here's the best thing about Microsoft. Any CFO that I've ever worked with, they always talk about the Microsoft bill that we have to pay at the end of every year as a utility bill. You hate to pay it, but you can't live without it. That's a great business. I really think of Microsoft as a utility that grows every year, or a utility that reinvests their earnings into higher growing enterprises. And so that's why I really love Microsoft as a corporation. Now, right now it's priced at around 23 times forward earnings, but I wouldn't conclude that it's cheap or not cheap just by looking at the PE ratio. I'd want to look at the growth profile. And so let's take a look at what that means. Now, here's my personal forecast out for those individual segments. Now, we walk through what those segments are so you know what they are. Overall, I see revenue growing in the low double digits over the next 10 years, led by secular tailwinds in cloud computing, aided by growth in productivity, and there's still upside in the personal computing gaming space. And so I see, 12.5% annualized growth for the next 5 years in the productivity and business processes segment. Intelligent cloud, I see that growing at 20% a year for the next 5 years and then bringing it down to 15% a year thereafter. There's a lot of upside to my valuation there. And of course, in the personal computing space, there are challenges right now, and in the near term, I'm just growing this out at 5%. But once again, there's a lot of upside to this segment. So overall revenues are growing at around 13% for the next 5 years, and then I'm growing revenues at around 10% thereafter. So steady Eddie as she goes, revenue growth. You can probably tweak up those revenue growth forecasts, but I just like it where it is right now. Now, before I go into the valuation, guys, I just want to remind you guys that approximately 80% of the watch time on this channel is from people that are not subscribed. So please, if you have the opportunity, hit that subscribe button and ring that notification bell to be notified when I upload great content. Now, using a terminal multiple of 22.5 times earnings, some of you might think that that might be a little bit high. I could agree with you guys on that case, and you can bring it down to 20. I like 22.5 times earnings just because of the cloud business. I think that it has a huge runway, and same with the gaming segment. And so I'm using 22.5 times earnings, but once again, you guys can change it as you wish. But just using that, I'm valuing the company at around $320 per share. Compare that to the current share price, $233 per share. It's trading at approximately 25 times earnings, which is similar to what they were saying in the article. And so the share price as a percentage of the valuation is under 100% for an exceptional company where my revenue growth forecasts aren't that high. So you guys can really take this up if you want. I would love this name under $150 per share, maybe $160 per share. That would be like a fantastic opportunity. It would be the largest position in my portfolio if that happened. But, we're not seeing that right now, but I am going to be looking to enter into an opportunity. But I just want to sort of give you guys an idea of how I'm thinking about entering into an opportunity. And so I do want to show you sort of the options chains, both with the cash secured puts and the covered calls, just to let you know sort of like what I'm seeing. Now let's start with the cash secured puts. There's 3 puts that I do want to show you guys. That's the 160s, the 200s, and the 230s. And so let's dive into these. Now this is the cash secured puts free calculator that you can get from the description below. I give it to you guys for free because I want you guys to just have this, right? And so the $160 cash secured puts, they're giving you an annualized yield of 4%. So it's not really attractive for me for the January 19, 2024 strike price. So let's move on from this one. The $200 strike price cash secured puts, I was hoping that the annualized yield would be higher than 6.5%. It's not. These ones would be excited if the annualized yield was around 15%, but it's just not there for me right now. But the net purchase price is really good at $183. So there is that. Now, if you just use the strike price for the current share price, the annualized yield is 9%. So once again, not exciting. However, the net purchase price brings you to around $200 per share. So there is that. But once again, none of these cash secured puts are exciting to me. Moving on to the covered calls, I'm going to look at the 230s, the 270s, and the $300 covered call opportunities. Now, just looking at the $230 per share covered call opportunity, the annualized current yield is around 13.5%. Total annualized yield is 12.6%. Nothing exciting going on here, so I'm not excited in this opportunity. Now, the 270, so it gives you a little bit of a capital gain built in here. The annualized current yield is around 8%, and the total annualized yield is around 20%. So this is somewhat exciting, but once again, I don't like that the buy-in price is $232 per share. I mean, the net buy-in price is closer to $200 per share. It's okay, but I would like an annualized current yield a little bit higher than that 8% that it's giving us right now. And of course, looking at the $300 strike price, of course, the annualized current yield would be much lower. It's around 5%, but of course, you get a lot of that capital gain. So the total annualized yield is closer to 27%. So this one doesn't appeal to me either. So overall, none of the cash secured puts or covered call opportunities make sense to me in this environment. The yields are too low. I would like to purchase these shares sub $200 per share, so I'm going to be keeping an eye on Microsoft. It may not happen, but a lot of you guys did say that it wouldn't come down to where it currently is trading at. And especially in this environment where you have more rate increases coming, I'll just be very patient. There's a lot of opportunities to invest in right now, especially in the chip space. So I'll leave Microsoft to be as it is, and maybe it will come down to where I would like to see it. Now, do you want access to that Microsoft model? I think it's very important. Well, you can get access to that Microsoft model and all the other models that the Patreons get access to at the lower tier of the Patreon. And if you want to join us for an epic live presentation, you can join us at that higher tier where I reserve my very best work for. Now, one exciting opportunity that I'm seeing right now in the market that's trading at approximately 50% of its intrinsic value, which is very future focused of a company, is AMD. And you can actually get access to that video right here.